Jairam, Executive Director of Kotak Mahindra Bank, is ready. Let's connect with him. Mr. Jairam, good morning. Thank you for joining us. Mr. Jairam, if I look at the global environment, things are looking charged up. Dow is above 14,000. Nasdaq is sitting at a historic high. S&P is holding on. Chinese PMI data has improved. European GDP numbers have been strong. But the minute I look at our markets, things are looking slightly rusty. Looks like benchmark indices have hit some kind of a stumbling block.
Yeah, I think clearly globally things are looking much better than what they were some time back. But I think the challenges in India sort of continue, particularly on the macro front. And I think the clear emphasis right now is on the worrying levels at which the current account deficit is. So I think in that sense, the market's sort of waiting to see what happens in the budget. Obviously, the finance minister has made a bunch of very positive statements saying that he will come up with a responsible budget, that he will draw a red line with respect to fiscal deficit, etc. And I think at some level, the market is sort of waiting to see whether he'll walk the talk, and if that is indeed what happens in the budget, then I would expect that the market would rally from then on.
Mr. Jairam, Oil India OFS went through pretty smoothly on Friday. Does this make you hopeful of the response to all the government paper that is lined up, the likes of NTPC, NALCO as well as SAIL?
Yeah, I think so. I think clearly there is a lot of liquidity available in the market. There are funds, particularly with FIIs, which they are willing to deploy in good stocks at good valuations. So I would expect that subject to reasonable valuations, many of these PSU disinvestments would go through fairly smoothly.
But is the demand-supply equation bothering you, Mr. Jairam? Suddenly there is a lot of supply and very little demand.
I'm not sure about very little demand. I agree that the supply has suddenly sort of opened up, but this Nikunj, if you go back in Indian capital markets history, has always been the case. Whenever there are windows when the markets have started to sort of do better looking up, you will find that the supply of paper sort of increases dramatically. So to that extent, it's not so unusual, and I would sort of take it as something which you accept as part of market dynamics.
But in the near term, do you think that because of so much of supply, liquidity will get challenged because there is limited liquidity? 2012 it was all about liquidity. This year also it is all about global liquidity. Because of QIPs, OFS, FPO, the global liquidity is now getting challenged, or it is getting channelized.
No, I think given the size of the Indian market and the sort of depth that we have, I don't think we need to be worried at most points of time about whether global liquidity is enough to meet the sort of supply from here. I think as long as at a broader level we satisfy the criteria of being an attractive market, particularly relative to many other emerging markets, and if there is belief that both policy measures which the government is doing here as well as on the micro front earnings are looking reasonably good, I think you will always find enough global money to come into Indian markets.
The government, though, Mr. Jairam, appears to be making the right noises of late with the decision on Reliance's no-go areas expected soon. How would you deal with this heavyweight, and are you part of the market participants who believes that perhaps Reliance is going to be a big participator in the rally this year?
Honestly, I don't really have a view on specific stocks, so I guess I'll pass that sort of specific question on Reliance.
But what is your view on the overall oil and gas space and the moves that have been implemented by the government?
No, clearly positive, because I think after a long period of time where oil and gas was subject to government whims and fancies, there is a belief that the sort of moves which the government is making right now will at least partially free up the oil and gas industry. And so clearly these are directions, moves in the right direction. And as long as the sort of dependence of oil companies on government policies reduces, I think it's always positive for that sector.
TCS is at 1365, Infosys is also holding on. Mr. Jairam, IT companies, they've come out with good set of numbers, they've come out with a good set of numbers for the quarter gone by, but for the quarter gone by, the currency was more like a tailwind. Suddenly the currency is now a headwind. So in the near term, because of the currency factor, do you expect IT companies to underperform?
First of all, I'm not sure I'm entirely in agreement with your thesis that currency is a headwind, because while you may have a temporary sort of appreciation of the rupee, I think given what is the situation with our current account deficit and no immediate sort of solutions in sight in terms of bringing that down, I think we are sort of probably going to see a depreciating currency, and I would sort of argue that at this point of time a depreciating currency is probably a far more likely proposition than an appreciating currency. So to that extent, for that very reason, I'd probably be positive on IT companies over the next say 6 months or so.
So between the consumers or domestic businesses versus global businesses, what is your inclination? Do you think in the near term global businesses will outperform local businesses?
Well, let me put it this way. I think we believe that there are two sort of themes which will play out over the next few months. One is what I just talked about, which is that if you are talking about current account deficit still remaining under pressure and a depreciating sort of currency, it would obviously impact positively sectors like IT or any others which have significant exports. So that's one factor. The other is that we also expect interest rates to come off further from here, and our sort of house view is that for the rest of the calendar year you're probably going to see another 50 basis points reduction in rates, which would clearly again positively impact some sectors, certainly the banking sector and a few other interest rate sensitives as well. So we'd expect to see some positives emerging from those sectors as well.
What are the other sectors, Mr. Jairam, where you've been impressed by the earnings that have been put forth this quarter?
I think honestly, in terms of sectors at this point of time, it's really the private banks which have looked fairly impressive in spite of a lot of talk about increasing NPAs, problems with credit, etc. I think earnings from private banks have been particularly good. And the other one again we talked about, which is really the IT companies where earnings have I think very positively sort of surprised the market. So at this point of time these seem like the sectors which look positive at least in the short to medium term.
The Jairam, competition is always considered to be the deepest insider. So apart from Kotak Mahindra Bank, which other private bank came out with good numbers?
I think almost any private sector bank you can name, I think the numbers were good, whether you're talking about clearly HDFC Bank, which has had spectacular sort of returns over the years, ICICI Bank, IndusInd. I think you pretty much pick most of your larger private sector banks and the numbers were, I would say, very good.
Where you are advising your clients that they need to remain overweight and they should allocate disproportionate amount of money, apart from private sector banks, of course, which we've discussed.
I think clearly part of it depends on the call on interest rate sensitives, because within that whole bunch you have sectors which look good on valuation, which include real estate, infrastructure, etc. So I think our belief is that as interest rates start to sort of come off further, there will be specific companies within these sectors which are probably the better managed sort of companies within these sectors, and they will start to look much better, because at this point of time most companies in those sectors are looking pretty good on valuation grounds. So it's really a question of identifying those companies which are likely to sort of move up a little quicker based on interest rate reductions.